Hi, it's Marty from the Accelerator team, and I'm here with Joe Brown. Joe's one of our accounts managers in our business innovation and our legal team. Hi Joe, how you doing?
Hi Martin, fine, yeah. How are you?
I'm super. Joe's here to talk about Solicitors Accounts Rules, what the Solicitors Regulation Authority require from legal firms, and we're going to talk around that topic for the next half hour or so.
Yeah.
So, if you're in the legal profession, this will be relevant. If you're not in the legal profession, skip.
Yeah.
This one is not for you. First off then, Joe, who needs an audit?
So basically who needs an SRA audit is pretty much most firms that are regulated by the SRA. So, there are slight exceptions to that, but it's pretty much firms that have either on average a rolling monthly average client account balance of over £10,000, or in 1 month they could go over 250,000.
So it's basically any solicitor who's doing almost any kind of work is going to have some money, but there are some exceptions?
Yeah, there are some exceptions. So if it's like a family law solicitor and the entirety of their money comes from legal aid, that's just treasurer's office money, so no requirement to get a client.
And solicitors should all know this then, but you talk about office monies and client monies. Mm-hmm. Is it worth just saying what you mean by that?
Yeah, so ultimately you've got to be comfortable that client money is kept safe and secure.
Which is the purpose of these reports, isn't it? You can't give someone a deposit for a house, the solicitor runs away because they've got no controls.
Exactly, yeah.
It's about protecting your customers' money.
Yeah, and I think it's both from a solicitor's point of view, you want to make sure you are keeping that clearly separate from the firm's money. And I think probably from a client's point of view, you want to make sure that you'll be comfortable that your money is going to be kept safe when you're using that firm as solicitors.
Yeah, so it's there to protect everyone, isn't it?
Yeah, it is, yeah.
There's been loads of different types of rules over how do the rules stand at the moment, and Joe?
So basically, back in November 2019, the rules changed and it went from a big, solicitors will probably remember, the rules were so many different pages. Some solicitors will probably remember the 14-day rule, where you've had 14 days to transfer your monies from client office, otherwise it was a breach. So you used to have loads and loads of them. But now it's basically a list of about 13, 14 rules, but it's massively been streamlined. And I think what you also had a lot of guidance accompanied with it. But now, again, you've still got that guidance, but it's basically like a prescribed rule of one page.
Down quite a lot. Has that caused confusion with solicitors then, thinking, it's not as onerous, we don't have to give it as much care? Or?
Yeah, definitely. And I think part of that as well is the SRA, historically they wanted every accountant's report submitted to the SRA regardless of whether you found anything wrong or not. Whereas now it's only if you do find either a material breach of the rules or a significant weakness in internal systems and controls submitted to them. So again, some solicitor firms, they do think, do I actually need to commission an audit? But again, still the audits do need to be commissioned and done within 6 months of the
Because there's something you said quite important there. It's if you find an error. It's not if the solicitor thinks they've made an error. They have to get an external audit carried out. It's whether we, in this example, find an error.
Yeah,
because they could go, I haven't done anything wrong. I'm not going to check, so there's nothing to report.
Yeah.
That feels like there would be a big hole in the system there.
Yeah, when we come to do the year-end review, we do ask for a copy of the central register in which any internal errors are picked up and the rationale that they've came to determine whether it is material or not. And in that instance, they should report that in that instance to the SRA. So when we come to do our review, we can have a look at what was done, assess their judgment.
So you're not just checking whether the money's been dealt with right, you're checking about whether they've also reported any issues correctly.
Yeah, that's right.
Yeah. So when you come to the end, you're kind of marking their homework, and they're supposed to mark their own homework as they go, and you're checking whether it was marked properly as well, aren't you? There's two rules.
That's a good way to put it, actually, because it probably goes back to what I'm going to come on to a bit later, that actually when we do these reviews, it's a lot more than we found all these things wrong. It's we're actually trying to understand in a lot of detail how the business operates, what systems they've got in place, what policies they've got in place to make sure client money is kept safe. And what we've started to introduce recently as well is actually, rather than saying here's all the things we've found that are wrong, we're actually saying these are the things actually you're doing quite well. And
keep doing it.
We've noticed this, you're doing it well, keep doing it.
Because you mentioned there's a couple of things, you've mentioned that there's a benefit to having a review as well. And I suppose if you're a partner in a 10-partner firm of solicitors, you might just be focusing on getting the houses sold, getting the probate dealt with, getting someone sued or whatever.
Yeah.
You probably want to make sure that someone internally is keeping all of your houses safe, aren't you? Because if this all goes wrong, you lose your stuff, don't you?
Yeah, I think internally definitely as well, but I think also the benefit is having someone external, that independent of the firm, such as us, that will come in and have a look at everything.
That's what I mean. So if you're you know, because someone internally is responsible for keeping this all on track. If you're one of the 9 in my example there who just, that's Dave's job, I presume Dave's doing it, or you know, Sarah's doing it, then someone externally checking gives the rest of the partnership that comfort.
It gives comfort as well, and I think as well quite a lot of synergy between like an accounting firm similar to us and a legal firm is quite a lot of changes can happen in any one year. Like you could lose, like a senior partner could retire, you could lose your finance manager, and all these things give rise to like additional risk from a
change gives uncertainty, which
so again it emphasises the importance of getting that review done, just to, even if there is some significant change, you're getting an oversight in how you're doing.
And you mentioned as well that, you know, the report will highlight weaknesses but also praise positives. That's good to know from an internal's perspective. You know, are the team doing what they're meant to be doing?
And I think it's not something that's actually required as part of it. It's just something that we've looked to bring, because actually we recognise that
people don't like getting told off every year.
I mean, from speaking with sisters, it's always seen as quite like a negative, or you telling them off, or do you know what I mean? If you find things that are wrong, and it's never really been that. It's just a compliance point of view. But actually, if we can adapt it in a way that you're getting a bit more value from the audit, then I think they would all, like the firms also be good to know what they're doing well. So that's what we've put in place recently.
Good. Okay then. And of course, again, you know, if we're talking here, I'm talking about a 10-partner firm with a team that manages the finances. This could be a single person firm, presumably, could it?
Yeah.
They haven't got anyone to bounce off, anyone to check off, and whoever's doing the report is, I suppose, that person, isn't it? Yeah,
definitely. I think it's having that comfort that an external firm can provide when you're doing it, just to give them a few tips in the right direction, but as well recognising the good things that they're doing internally too.
Right. Internally then, there are specified roles within these regulations, aren't there? Is it worth just talking about who they are? Because in this 10-partner firm, there might be 2 of these who've got an official role. If it's a 1-partner firm, there might be one person who's got to do all of these roles. Is it worth just setting out what the things are first?
Yeah, definitely. I think we're getting that question asked quite a lot recently as well, in terms of when there's change or who should be having each role. So there's a COLP and a COFA. The COLP is the compliance officer for legal practitioner, and the COFA is the compliance officer for office, finance and admin. So for the legal practitioner, usually it's basically who's got to manage the regulatory side with the SRA for being an authorised body with the SRA or whatever legal status they've got. So usually that's a managing partner or qualified solicitor, basically, who's been through the relevant training and understands how the firm's set up. The COFA, the compliance officer, they could actually be, it's basically anybody who understands the accounts rules best within the firm. So quite often it's been asked, like, could my finance manager be that, not technically a qualified solicitor, but deals with most of the finances, and it's absolutely fine as long as they're authorised by the SRA.
And it's obviously the key thing here as well is they've got to demonstrate a clear understanding.
Yeah, definitely.
Because otherwise they're going to fail dramatically when you get to the year end. They're not going to have a clue.
Yeah, definitely as well. I think it's all going back if they've got the relevant training, if they had the relevant experience. It's a firm's decision, but as long as there's some rationale behind it.
So the COLP would normally be a qualified solicitor, one of the partners, if not the senior partner, but the COFA can be a non-solicitor.
Yeah,
it's important to note though that, and again, people in the industry will know this, but if you're not in the industry and you're starting a job tomorrow and this is your first time in law, there's a lot of this isn't just bookkeeping. It's not just double entry bookkeeping. The finance role within the solicitors is dramatically different, isn't it?
Yeah, definitely. And I think because the rules are so prescripted, you need to make sure that everything you're doing from a financial point of view meets all the criteria for each of them. So there is added differences really than just a standard bookkeeping role really, because you've got that many other things to think about. But I mean, the rules, just whoever's more suitable for them SRA.
Would it be normal in a larger firm to have almost 2 people in the finance team, one looking after the rules and one just doing their normal books, getting the invoices out, chasing people for payment?
Yeah.
Would that be a normal scenario? Or?
Yeah, quite common, and most of the firms we deal with will probably have a similar setup where they've got an office manager, finance manager with a couple of cashiers who will deal with the handling of client payments and that, and so on.
So we've had these rules for a long time. You mentioned earlier though that there seems to be this kind of idea that we don't have to do anything now. How often does that come up then? And like, because you mentioned you said to one client, we're coming out to do the audit, and they're like, oh, I thought we didn't need one anymore. Yeah. What made them think we didn't need one then, Joe?
So they, in the particular example, they were a family law firm, so quite a lot of their monies was coming from legal aid. So I would understand the point of view, but the problem is they've done probate, conveyancing, others as well, which is still handling
so they were primarily legal aid, but had enough of the other work to trip over the threshold.
Yeah, that's it. And once you, at the start of each audit, we do like a requirement report just to understand what amount of balance is in, where the money comes from. Is it from clients or is it from legal aid or elsewhere? And
that'll determine the level of detail you go into, which files you might want to look at.
Just the requirement for the audit, basically.
Can you talk us through what the audit actually looks like then, Joe? Because there'll be people who've worked in law their entire life, start their own firm, and go, oh, I didn't realise all of this went on behind the scenes.
Yeah.
Just can you talk us through what an audit would look like then?
Yeah, so it starts initially just by getting an understanding of the period that we're looking at. So understand if they've had any visits from the SRA, any correspondence that we need to look at initially. Has there been any changes in fee earners, partners during the year? Any change in the type of work that they do, which all gets factored into how we test. And then once we get through it all, we basically select a sample of files to look at and review.
So you would say, well, look, you were doing all family, you're now doing probate and conveyancing. Yeah. You've taken on 6 people, right? On balance, we're going to look at 25, whatever it is. You give them a list of. Do you state which files you want to see? Do they randomly? Do they come up with?
No, so we actually select a sample for them. So we do it on a basis that although we do only test a sample of files and a sample of transactions in the year, we try and spread it across the different types of work. So
look at a little bit of everything to get a feel.
To get an understanding of how the file keeping is, how the record keeping is, how they deal with. So basically, it's quite heavily it's entirely focused on client money, client account transactions. So what processes they have in place to authorise withdrawals from the client account? Do they authorise their cheque payments properly? Because
there's a procedural side as well as the money. They could do all the things right with the money, but if they've got no internal policy that says, sign it off this way, check that, then that they could almost get a bad mark for, well, you kind of got it right, but by chance, because there's no policy.
It definitely, I think it all comes down to that point that you're just trying to make sure client money is safeguarded. So understand how they authorise withdrawals from the client account, what their banking procedure is, how they do their monthly bank reconciliations, just trying to get a feel of what they do on a regular basis.
How much time does this take from the solicitor end then, Joe? And obviously I know it takes us a while because we've got to do all these things, but would you normally sit and chat to a couple of the people across there to get a feel and then...
Yeah, so I mean, even if we were to arrange a site visit, normally the start bit would involve just having a conversation, how the years went and things like that. But again, I would just sort of say the good thing is when we have that relationship where we don't just do the audit, we have the accounts and everything alongside it, you sort of get a real good understanding of the firm and you see the full picture. Yeah. So...
Because you shouldn't, I mean, there will be occasions where you turn up and they go, oh, you've got a new partner, I didn't realise that. Yeah. But if you're advising the firm on the whole, you normally know who's coming.
Yeah, definitely. You see it not just at one time during the year, at various intervals during the year, yeah.
What, we normally get to the end of these, the podcast, Joel, and we normally say, what's the one thing people are doing? But you've got a couple of things that are like tips that people just keep getting wrong, haven't you, that come up quite often in your reviews?
Yeah, I just thought I'd touch on, because what we mentioned previously, rewind a couple of years ago, we were having to submit all of the accountants reports to the SRA, whereas now it's just either qualifying breaches really, or any significant weaknesses in internal controls and systems. And I just thought if I'm honest, ever since that, there's only been a handful of reports that we have actually qualified. And I think that
qualified being what does that mean?
Where found, like, so there's either been a qualifying breach or a significant weakness in internal systems and controls, which I think is, for the firms we work with, they are quite long-standing, well-established firms.
Demonstrates that they're getting most things right.
Yeah, exactly. And it's again going, like, the positives. We're trying to make sure that we let them know what we've looked at, so give them a bit of value of that. We know you're doing things well. But there is a couple of things that I'd wanted to touch on, just things I'd seen that are becoming quite common. Well, not common, but basically, if the SRA see this, they'll want a qualified report, basically.
Well, and how many have you got?
I've got three I want to run through.
Yeah.
First one is the client account bank reconciliation process. It needs to actually be a three-way reconciliation. So if you can imagine, like, a normal bank reconciliation, you start from bank statement, add your unpresented items.
Our audience is not normally made up of accountants.
Yeah.
Or even, and solicitors and accountants don't normally make good bedfellows. There's a bit of professional rivalry sometimes, isn't there? But so what do you mean by three-way? So two-way is your normal double-entry bookkeeping, you mean?
Yeah, so you start
from
from
the money's
bank
left
statement,
one place and it's gone somewhere else.
So on the face of your reconciliation, you'll start with your balance per the bank statement, deduct any uncleared or unpresented items to get your balance that you've got in your cash book. So this could be on your accounting software, whether it's Xero, whatever.
So I look at the bank at 5 o'clock tonight and I say, right, there's 10 grand in, I've paid 3 checks in today that haven't cleared, and I've posted 4 checks out, they haven't gone.
Therefore, the reason that
I'm old-fashioned, so I'm using checks. As simple as it is.
Therefore, the reason why my bank balance per my accounting software doesn't agree to my bank statement is because this and this.
So my accounting software says I've got 10 grand, the bank actually says 5. Yeah. The difference is the stuff that I know has gone out, it hasn't cleared, and vice versa. Yeah,
definitely. Then so that's your 2-step, that's your standard bank rec, and then the final step, the third step, is, and this needs to be done on all, we say monthly, but the requirement is at least every 5 weeks you're supposed to do a bank reconciliation on your client account, so that includes...
So separately I say, well, I've got 5 grand in the bank, 2.5 grand of it is Bob Wilson's. Yeah. Let's make sure that we think we've got 2.5 grand for him and we can see the money in the bank. Is that right?
Yeah, that's it. So there you've got your 2 steps. The third step is normally firms will have another bit of software run alongside it. It'll be like a case management software.
Right.
So where it'll have all your client matters wrote up at any one time. So the final step is you need to make sure the total amount of client funds you've got on your matter balances agrees to what you've got.
So does that 2.5 grand for Bob match what we think we've got for Bob?
Yeah, but the thing is, the client account, it could be made up of 200 matters.
100, yeah.
And it just it gives that comfort that all your client matters are properly wrote up at any one time.
Right. Okay then. So what's the thing that people keep getting wrong there?
So then? if for example there's only a 2-step and it hasn't been cross-checked back to the case management software, where all the matters wrote up.
And you would spot that because you would say, well, I want to see your internal procedures demonstrating that you're doing this every 5 weeks as a minimum.
We review all of the bank reconciliations as part of the audit as well. So
do you turn up and they go, oh, well, we didn't do it within 5 weeks? Is that the common feeling?
That's the common feeling, or if it's only like a 2-step, or again, they do need to be authorised and signed and dated by the whoever's in charge of signing them. Right, usually the COFA.
Right, okay then. And I would imagine if you've got hundreds of cases on the go, that could be quite a time-consuming thing, but
yeah, I mean,
but it's necessary. It's other people's money, isn't it?
Necessary, and again, it is required with the rules as well.
It's not optional.
And the good thing is, well, there's templates out there which quite a lot of, I know the firms that we deal with, they've adopted now, which is you sort of meet all that criteria, but the pro formas that gives you step-by-step instructions of how to fill everything in. So
it's time-consuming, but not necessarily that complex if you've got good records. Yeah. Right, okay. What else is going on then?
Another one, so that's probably like from a systems and controls point of view, just an example of one. From a material breach point of view that we've seen is, it was quite a serious one. It was providing a banking facility for a client. So what that means is, for example, if you're buying a house, you're only really supposed to hold client money relating to that matter, whereas in
only while the matter's ongoing, presumably.
Yeah, so it's got to be for that matter. But in this instance, there was actually money there was like can you transfer this money to you, being my solicitor? Then can you distribute it to this and this person?
Also, it wasn't matter related.
Wasn't matter related, and
because solicitors aren't banks.
Yeah, exactly.
Yeah.
So and the SRA really don't like it when that happens.
So if I sold a house, for instance, I can't just say to the solicitor, well, I'm probably going to do something with it, just sit on it.
Yeah.
And then, oh, I'm buying a car, can you pay for my car?
Yeah.
Or we need to pay the school fees or whatever.
So the fund should only relate to the matter in which is opened and that the firm is instructed for.
And being the bank isn't a matter.
Yeah, no,
that's what I'm trying to get at.
Yeah,
you can't just go, well, I'm
yeah.
only using it for their my client, so therefore it is a matter. Well, it's not. It's got to be case specific.
Case specific, yeah.
Right, okay then.
Yeah.
I mean, and why would you want to do that as a solicitor? Why would you take that burden on?
Yeah, I don't know the reason for that one, but it's
well, I suppose you've got a big client and says, "Wow, I want you to do it."
Mm-hmm. Yeah.
It's probably just pressure, isn't it?
Yeah, it is. Yeah.
Yeah. And what else have you got then? Because did you say there was 3?
There is, yeah. So the other one was I've remembered it.
doesn't come up that often, does it?
This one's actually is more common than the others. Actually, it's where a client matter goes overdrawn. So just to explain a bit about what that means is, again, if on a case management software, we would sample a selection of ledgers to review. If, for example, there was £1,000 held on client account for that client, but actually there was £2,000 that was authorised to be paid out, in effect, that matters in minus £1,000.
You're now using another client's money to fund.
Which
you're subsidising a client from another, aren't you?
Yeah, exactly. So again, going back to the point, you just want to be sure that your money's kept safe.
How could that happen then, Joe? So I mean, what type of things would come out of that? So
basically, we do review how firms authorise their transactions. So what it could be sometimes is if money's due to be received, but it just hasn't quite cleared the bank, and then a couple of days later the money comes in. But actually the issue is it shouldn't have been authorised until that money was cleared.
So you're selling a house, because ironically you might be paying the money to the client here. Mm-hmm. I suppose if I've sold a house, you're my solicitor and you send me the money before it's cleared from the other solicitor.
Yeah.
Yeah, it might be corrected quite quickly when the money comes in, but you shouldn't have sent me it until it was there.
Yeah, exactly.
Is that an example?
It is an example, yeah. And
right.
That's you pretty much bang on the point that in effect, for them couple of days, you potentially use somebody else's money. You've used somebody else's money to fund that transaction.
Because until that money lands, well, it hasn't landed, has it? I know it seems like such an obvious thing to say, but just because a solicitor and a buyer said, "Oh yeah, you're going to get the money," it doesn't mean you will.
Yeah, exactly. I mean, what we can see is if it's spotted, the firm would just say, well, I'll transfer £1,000 from my office account to cover the shortfall until we then get that back. But if there's instances where that doesn't happen and there's a bit of a time period in between, then that's when it becomes a bit of an issue that we'll need to look at. Okay then.
And it's interesting because, again, a lot of businesses don't need office accounts and client accounts. I mean, the nearest I can think of is you put a deposit down on a sofa, and until they've delivered a sofa, it's not your money, is it?
Exactly, yeah.
But none of this money is your money as the solicitor, is it? So in the office account,
I mean,
presumably all of your normal bills and expenses go through that, and they shouldn't mingle.
Yeah, exactly. Well, I mean, if it's if for example you've raised a bill on a matter, they could pay the money directly into the clients could pay the money directly into your office account, and that would be fine. But if it didn't relate to a specific matter, then it's pretty much all the time client money.
Right. Okay.
It should be kept separate, yeah.
Good. Well, we do normally finish with give us one thing that people keep getting wrong, but you give us 3. I mean, is there something, aside from the procedural things that keep going wrong with Joe, is there something that people, I mean, you've given us examples of breaches of the rules.
Yeah.
I mean, if you move away from that, then is there something that, I mean, do solicitors pay this enough heed? Do they care enough about it, or I mean, if I'm honest, it's just because there has been there was quite a big change, and it was the first change for quite a while, so there was a bit of an uncertainty of what actually needs to go ahead in quite a lot of cases. But I think ultimately the added security of having somebody come in and just have a once over how you're doing with everything, I think is that's it shouldn't be seen just as a requirement.
No, exactly.
You should embrace it, and
I think that's the thing. It's often seen as a quite negative, but it's actually not. It's like an added set of eyes, independent eyes, that I can have a look and see what you're doing well and what you could maybe touch up on. And the benefit of having somebody come in is we can say, well, we've noticed this, but this is what you could do to maybe improve that a little bit.
I like that because just to use the kind of mark on the homework analogy, imagine if you only got your kids' report when they got an F, but you didn't know that they were doing A's and B's and C's and other topics. Like, imagine if you never got told unless it was a fail.
Yeah.
That'd be quite bleak, wouldn't it?
Yeah, definitely.
As a parent, you would go, oh, no, like, are they doing anything well? Because I haven't heard from you.
And I think that's
so it's quite good to say, no, you're doing some good stuff.
I think that's what we've recognised as well, and definitely in the more recent reports that we sent out, we've placed more of an emphasis on giving them like a bit of a summary of what we found that they do well and what they could improve on.
Good.
But
all right, Joe.
Yeah, it was just I just thought I'd do this just to give a few tips of how things are going there at the end. Yeah.
Excellent. Thank you very much, Joe. If you're a solicitor or you're about to be a solicitor and you're in a firm, that's why your COLP and your COFA, to use the terms, that's why they take these rules seriously, trying to make sure you don't all lose your houses and stuff when you get sued for spending Bob Wilson's money, whoever Bob is. I keep using him in the examples.
I know, yeah.
But, thanks very much, Joe. Really appreciate that. I hope you found that interesting. And Joe's here. If you want to reach out, hit out in the comments, reach out, and Joe will be happy to help if you've got any queries.
Cheers, Martin.
Thanks very much.